We're live. Good morning, good morning, good morning, everybody. How we doing this morning? We all good? Vivian, Detrice, Dylan, good morning. Hope you guys are having a great morning. Hope you have a great night's sleep. Just let me know as well in the chat if you can hear me too. I always want to check on that, make sure YouTube isn't bugging. But I got up, got my run in this morning, was feeling good. We had some bad air quality yesterday in and around here. It was crazy at the smoke in the sky. So I don't know if that's still Canada or if that's Maui, but regardless, prayers up to everyone involved in that. I was sent links in my family group chat, and now apparently there's this, or apparently not even now, I just wasn't aware of it. There's like a whole conspiracy around what happened in Maui, what's happening. So for anywhere there's wildfires going on, prayers up to them. And it's just a terrible situation. So I'm just thankful for life here this morning, for the ability to get up and to run and to go earn it. Because there are a lot of people that didn't wake up this morning, right? So not to put it on a solemn note, but just to start us off on like an appreciative note where it's just like every day is not promised. So make sure you go up and get it. I'm assuming everybody can hear me because I didn't hear anybody say they couldn't hear me. So obviously let me know in the chat if you can't hear me. If you can, give me like a thumbs up. Let me know, hey, I can hear you. Okay, cool, awesome. Because you never know nowadays. But with that in mind, welcome. Whether you're new, returning, you're a licensed, card affiliated member of this group, right? The Stock Options Made Easy people, the purpose chasers, right? Out here chasing purpose, not profits, chasing the process and not profits. Welcome. This is a session that we do daily because investing in yourself and getting that compound return takes daily investment, right? So this is an investment that we make daily, trying to get 1% better each and every day, and that compounds over time. I'm your host, Adam Holland, stock options expert market strategist, and fellow 1%er, right? 1% is the name of the game. And if you do that, you have things compound over time and you really start to make actionable change in life. I wouldn't rather do it with any other group of people. So I got my run in this morning. It was hot as crap. I was tired, but we got it done. We made it happen, and I'm excited to continue executing. As always, throw a 1 in the chat, whether you're watching live or via replay. Signifying your intention to get 1% better. And then let's get after it here this morning. So our top news shot in the arm. The biggest IPO of 2023 is taking shape. In fact, it'll be the biggest IPO of the last 2 years. SoftBank-owned chip designer ARM has filed a preliminary prospectus for a NASDAQ listing that will take place in early September, which could provide a windfall for SoftBank founder Masayoshi Son, whose Vision Fund lost tens of billions of dollars last year. It'll also mark the second time ARM has gone public, with the company's first listing taking place in 1998 before SoftBank bought the firm for $32 billion in 2016. It could now be worth double that amount. Now, for you guys who don't remember, ARM also was a company that NVIDIA was trying to acquire, and then, the regulatory powers that be struck that deal down. So that's probably where you've heard us mention it before. In terms of snapshot, ARM's circuit designs and chip architecture are present in almost every smartphone, as well as many personal computers, cards, servers, and networking equipment. Demand for its products surged during the pandemic, but profits have cooled off in recent quarters as demand for electronics in the chip sector as a whole dropped off. However, the long-term picture for the industry forecasts an exponential increase in computer power for things like big data and artificial intelligence. ARM currently estimates that approximately 70% of the world's population uses ARM-based products. That is very significant, right? 70% of the world's population. That is insane. And expects this market to grow by nearly 7% to reach around $247 billion by the end of 2025. It will still have to navigate some tricky waters to achieve its goals, with risk factors including exposure to China and open source architecture groups. One of the world's most important semiconductor businesses has also sought to boost its profile by speaking to a number of major tech companies about being anchor investors, including Amazon, Apple, and Intel. It has also reached out to NVIDIA, which has ridden the AI chip frenzy wave and has previously tried to buy ARM for $66 billion before getting the thumbs down from regulators. I mean, imagine if regulators allowed NVIDIA to buy ARM. NVIDIA would literally be unstoppable. Like, it would be the go-to indiscriminate chip powerhouse. So I guess that's why regulators didn't let it happen. But yeah, just crazy even thinking about that. In terms of outlook, the success or failure of ARM's offering will be closely watched by investors, issuers, and bankers as a gauge of whether the recent revival in the IPO market is sustainable. Some optimism has been seen around smaller IPOs like restaurant chain Kava in June and AI beauty outfit Oddity Tech, ticker ODD, in July. But bigger players may want to see if things are fully defrosted before jumping in. Grocery delivery company Instacart, ticker ICART, and footwear maker Birkenstock have both shown interest in going public within the next month, as detailed in Seeking Alpha's latest IPO roundup. So I think that's, big news here. ARM, I don't think you could debut a company or go public in a hotter sector than chips right now. They're probably recognizing this as a major opportunity. They know that we are in the midst of this crazy speculative bubble with AI, right? And whether it pops or it just, goes on to grow bigger and bigger, I have no idea. I'm not here to speculate on that. But I think it is important to recognize that like ARM is probably trying to capitalize on that hype. They're like, listen, guys, everybody wants to find the next NVIDIA. They're throwing out that stat that 70% of the world's population uses its products. They're basically like, hey, everybody who missed out on NVIDIA or, has been wanting to get in at a better price on NVIDIA or whatever, just come over here to ARM, right? It's pretty much what they're looking to do. They're like, NVIDIA already tried to buy us, so you should just buy us too. They might not be wrong. I still stand firm with, how I feel with IPOs, and that's, IPOs, you can always end up getting them at a better price. That doesn't mean that ARM won't run when they do IPO. But it's something where you want to completely look at that as like a speculative endeavor, right? And treat it as such. So, when ARM IPOs, just make sure that you understand what that is. Yes, it can get a crazy run up, but tons of stocks IPO get crazy run ups, and then they always come back to, go lower than their IPO price. But that is interesting, right? Interesting. We got another, chip maker on the horizon, and I could definitely see that AI frenzy kind of making its way into ARM once they IPO. Now, let's see what else we got going on here. So that'll be something to watch, keep an eye on. And again, that listing would take place in early September, so not too far around the corner. Global news: BRICS in the wall. Leaders of the BRICS nations who are looking to transform their group into a geopolitical force that could threaten the West's dominance on the global stage have converged for a 3-day summit in South Africa. While China and Russia are pushing to expand the bloc, other members, Brazil and India, are hesitant. Even so, BRICS is moving ahead with efforts to reduce reliance on the dominant U.S. dollar, ticker DXY. Quote, any expansion of the BRICS grouping could determine the speed with which the bloc adopts commercial and financial systems outside of the dollar sphere, noted ING Economic and Financial Analysis. So, I mean, BRICS has been all the rage, right? It's been one of those ongoing kind of stories where we've been getting developments, week to week, where it's just these, this coalition of companies or countries is really just rising up to challenge the dominance of, America in the West when it comes to, the global stage. It's just, it's one of those things where it's like, when it comes to BRICS, we see like, oh, China's going to unseat America and this and that. But, we see Evergrande's collapse and we see China really struggling. And it's like, can China and Russia, which are personally struggling, their currencies are in free fall. They're dealing with issues with inflation. One is outright losing a war to an opponent that, they should have bested hypothetically within like a week. So it's like there's these two kind of polar opposites portrayals being made. It's like, on the side of BRICS, it's like, oh my gosh, like BRICS is going to unseat America. But then when you look at like China and Russia individually and what's going on, it's like, wow, these nations are just weak right now. So, you can't have both. So we'll see, if BRICS does ever end up unseating America. But at this point, I think that we're still, kind of firmly in the driver's seat. When it comes to the global stage. So they can try, and we'll see what happens from there. I have no predictions on it or anything. I just think it's interesting kind of watching this very polar depiction of like when it's BRICS, it's like China, Russia, they're going to unseat the US, the world is over, the sky is falling. And then it's like when you actually hear about what's going on in China and Russia, it's like, okay, they don't look like they're much of a threat right now at all. So only time will tell. But we'll continue to take in these updates about BRICS and also economic data happening in China and just kind of form our conclusions from there. But in terms of financials, Bank Watch, following close on the heels of Moody's rating cuts, S&P has downgraded 5 regional banks, U.S. banks, due to tough operating conditions, including Comerica and KeyCorp. Comerica's ticker is CMA, KeyCorp is KEY. The agency echoed concerns over higher for longer interest rates and asset quality risks, especially for lenders with material exposures to office loans. However, their outlooks were revised to stable, reflecting improved stability and relatively good funding metrics. A Fitch analyst recently warned that U.S. banks could see more downgrades if the operating environment weakens further, while Seeking Alpha analyst Macro Tips Trading recommends steering clear of U.S. banks for now, given potentially large unrealized losses on assets. I mean, this isn't anything new. Regional banks are in trouble. As I've been talking about here, for the past number of months, these big players are just going to continue to get larger. They're going to buy up these crusty regional banks and take them on. And power is just going to get even more centralized in the banking sector, which is like the exact opposite of what, everybody involved in the crypto push would like. And I think, it's kind of opposite of how it should be, right? Because when power is, centralized in the hands of a few, it kind of doesn't give us many options when it comes to like regulating these entities, because it's like, what are you going to do? They literally hold all the money. So, in terms of that, we're just seeing this continue. Regional banks continue to struggle. I don't think it's going to end anytime soon. Just the few that kind of went under, I think we're just kind of ahead of the curve, but there are plenty more that are, rounding that turn where when we have interest rates higher for longer, these banks just can't hold out, and they end up just going underwater. So yeah, I think this is just part of, again, a larger kind of trend that's happening where these regional banks will struggle. In terms of how you can play it and how you can trade it, there is a regional bank ETF that we were looking at. I can't remember what the ticker was, but if you literally just KRE, yes, S&P Regional Banking ETF. So KRE is a regional banking ETF. Regional banks actually weren't doing bad for a bit. Fired like a nice little daily/weekly inverse head and shoulders. Breakout there above, what level is that? Like 44.60, something like that. In this 44.24 area. And it came back down to retrace it. I still don't like, regional banks. So I personally, am not looking to enter any bullish trades on regional banks, because you could just get news at any point that one is insolvent and then the ETF tanks. But they've been starting to recover. But it's just something that I don't want to touch at all right now. So I'd rather focus on the big guys that are absorbing them and have tons of cash reserves like Goldman Sachs, than anyone else. Now, in terms of COVID, masks are back. Lionsgate Entertainment has reinstated mask mandates for roughly half of its staff at its flagship office in Santa Monica, California. The media giant also brought back rules related to self-testing and international travel, as many employees recently tested positive for the virus. The U.S. has been seeing a resurgence in COVID cases, with the new variant EG.5 or Eris being the dominant strain, though there is no evidence of it being more severe than prior variants. Shares of COVID vaccine makers, which are gearing up to launch updated shots this fall, lit up on Monday amid increased COVID hospitalizations. I did hear about this. My sister was telling me about it because she had been wearing a mask going back to work just before it was mandated, just because she ain't got time for it, right? She's not dealing with being sick. But yeah, I mean, COVID is back. It never really left. It's just kind of like in the rear view. And it's, vying for our attention once again. COVID, the attention monger, is back. And, some people are saying that this one is worse. So this report is saying that it's not worse than the other variants, but I've been hearing that it's worse. So I have no idea. I can't speak on it. I'm not a medical professional. I'm just here to say that in terms of it affecting markets, COVID isn't something that really impacts, broader, like the broader market like it used to. Maybe with Pfizer and Moderna, right, and those vaccine producers, you'll see like pushes based off of COVID news. But in terms of like SPY dropping like it used to, and we would get like stats on COVID deaths and stuff. The market doesn't do that anymore. So it's not really important other than the the tickers, the vaccine tickers, they get impacted. We're not seeing, any craziness. And unless we see like some type of new super deadly variant, which, obviously I pray to God doesn't happen. But unless we see something like that, we're not going to really factor COVID news in anymore to kind of market sentiment. Like that isn't anything at all that I say, oh, COVID is coming back. Do I now expect, the market to sell off like we did in 2020? Absolutely not. In terms of today's markets, we're looking pretty much green across the board. Not surprising, again, in line with the analysis that I gave on Friday, in line with the analysis from yesterday. We broke that hourly downtrend, so we got SPY moving to the upside. You're seeing this happen in real time, right? All the things that we talk about each and every day are going on in real time. And if you take the time to learn to use the tools to take advantage of it, you make good money, and you do so consistently. So to anyone, who doesn't think it's for them or they don't have the timing will never be perfect. The timing is never perfect for anything. The timing is never perfect to get married, to propose, to have a baby, to, literally do anything. The time is never perfect. You just have to do it, and you just have to choose it, and that's what it is. So make sure that you're doing what's necessary in order to just execute, and then things fall into place. But when we're giving out the type of value that we're giving here within this community every day for free via these live streams, you can't beat it, right? You can't beat it. And it's something that you have to take advantage of, because opportunities like this aren't here often, right? And I feel like that's a big issue that a lot of people have, is not being able to recognize opportunities when they're there and take advantage of them swiftly, right? And with conviction, because the time that passes, that opportunity can dwindle away. So you just want to make sure you're striking while the iron is hot, and taking advantage of things while you can. But yeah, mostly green across the board. I won't go deep into it, so I'll have plenty of time to do my breakdown here, in the trading group. In terms of today's economic calendar, we do get existing home sales at 10. Might be the only kind of thing that is important. But again, it won't be super important. It'll be like that 1 minute, 2 minute candle volatility possibly. So what else is happening? We'll finish up here with our WSB survey results. Stocks and mutual funds, best long-term investment. So I guess they asked people what they thought was the best long-term investment. Treasury yields climb, with 10-year topping 52-week high and 2-year retaking 5%. Nvidia pops as Wall Street hikes price targets for godfather of AI. Permian Resources, ticker PR, to buy Earthstone Energy, ticker ESTE, for $4.5 billion. Kenvue, ticker KVUE, to replace Advanced Auto Parts in S&P 500 index. Google, Moles offloading another campus in California. Lockheed Martin, ticker LMT, and Northrop Grumman, NOC, awarded $1.5 billion for satellite contracts. And then Zoom raises fiscal year guidance as it expands products. Stock rises 5%. Now, Microsoft Activision, UK regulator opens new probe. Just ongoing big tech crackdowns. What else is new? And then sandwich chain Subway nears $9.6 billion sale to PE firm Rourke Capital. Now, in terms of markets today, it's important to recognize like that pivotal spot that we're at. We have a lot of different bearish patterns that fired last week, and we're getting the retest of those levels here today or in the coming days. Some got it yesterday. It's important to, make sure that we're keeping an eye on this, right? As we get to the middle of the week, we'll get to a pivotal point where we either continue being bullish or we flip right back around, right, in order to continue on the bearish train that we were already on. So just make sure you're aware of that. There are a lot of important levels. You've got to be cognizant of those levels moving forward as you execute, right? With Apple, 177.35. We can close above that by end of day. Apple can kind of try and start to put something together to work its way higher. If we close back beneath that, Apple is going to continue to head back lower, right, and sell off significantly like it has been for a lot of profit. So be aware of that, be cognizant of that, and make sure that you have the, the education in the system and the mindset necessary to take advantage of that opportunity to make money off of it, right? So everybody, that'll wrap us up and take us out here. Again, don't forget, anybody that needs to be putting their money to work for them in markets, send them over to adamhollandeducates.com. We got a few spots left for almost 30% off. It's the cheapest you'll ever get this opportunity because, as you know, value is added each and every week to this course. And I pretty much put into it everything I would have wanted to know myself back when I had to front 25K to learn to do what I do, right? And it's significantly less in order for you to get involved and do so at a high level. So make sure you're sharing the good word and checking out that free content getting pumped out every day on Instagram, as well as YouTube, as well as TikTok. And have a great rest of your day. I'll see you guys back here tomorrow for our next pre-market prep session. Peace, people.